Hi everyone, let's talk about what happened in real estate last month, what I expect to happen going forward, and how that affects you as a buyer, seller, or a homeowner in today's market. Check out the data here that I have in front of me. New listings this month are very slightly up since last month, but significantly higher than last year, 13%. Listings are up 13% over last year. That's good news to have more inventory for buyers. Not as great for sellers, but we'll find out about that in a minute. Active listings also up 18% since last year. We're finally, it seems from this graph over the last 5 years, it seems that we're finally finding a bottom and maybe starting to turn this thing around. Now, days on market have come down significantly, which means properties are selling faster now than they were at the beginning of the year. However, this is cyclical. If you look at my graph, the high is usually at the end/beginning of the year, and the days on market drop into the middle of the year and then climb towards the end of the year, drop, climb, drop, climb, drop, climb, drop. And so going towards the end of the year, I expect the second half of the year, we'll call it, it's like a second half of a game every year. I would expect days on market to increase. That means I would expect properties to take longer to sell going forward toward the end of the year. Now, months of supply is a measurement of how many months would it take to sell the current inventory at the speed at which things are currently selling. Okay? Sounds a little bit complicated, but really all you have to know is that months of supply are slightly up, which means it would take a little bit longer to sell all the properties on the market today at the speed at which things are selling. Price per square foot is up 8.7% over last year. Now, this is a fun metric because if we toggle down into single family detached, it's 9.9%, so it's even higher. And if we go to condos, attached condos, well, it's 4.9%, so it's actually much less aggressive on the condo side. So this helps me figure out what types of properties are in more demand right now. Let's go back to all properties for the sake of conversation. And if you ever want me to drill down on your property, your city, your neighborhood, just let me know, shoot me a message or give me a call, and I'll be happy to do this for you specifically. No charge, of course, just let me know. Now, percent of last list price here, we're right around 100%, a little bit over, which means it's a pretty strong market. Percent of original list price, same thing. That means there's not many price drops. If you see back in 2022 when interest rates first started spiking like crazy, people were buying way over list price, and then interest rates started spiking, and then people started dropping their prices like crazy. So right now we're back to level, right around 100%. People are paying about 100% of what people are asking. So I think that's pretty cool, kind of a healthy market. And let's look at interest rates and what happened recently. In the last week, you'll see that interest rates dropped about 0.33%, which is really cool. If you're a buyer, that's great news. Excuse me. If you're a seller, that's also great news. However, if you're a buyer, that's a mixed bag, and I'll tell you in a minute as we finish. But the first question comes to mind: why did interest rates drop so much in the last week? Well, this is where we go to investing.com and look up the economic data that was released in the last week. So you'll see here, last week, Thursday, May 30th. When did interest rates start to drop? Last week, May 29th, was a Wednesday, and so everything started dropping after that. So on Thursday, GDP, gross domestic product, which is the sum of all goods and services produced in America, came out less than the forecast and significantly less than the previous quarter. That means that the economy is technically slowing down. Now, it's not negative, it's just less positive than the last quarter. And that is the reason that interest rates came down. Along with that, initial jobless claims were slightly higher than forecast and also slightly higher than the previous month. That means more people are claiming unemployment than they were in the previous month. Chicago Purchasing Managers Index, PMI, is under 50, which means there were less orders for new manufactured goods in Chicago than previous month. And then lastly, 2 days ago, job openings were also less than the forecast and less than the previous month. That means there's less job opportunities currently listed on the market. So there's less opportunity for employment, less opportunity for increasing wages, which creates less demand, which causes investors to speculate for less inflation, which causes interest rates to come down. Interest rates, long-term interest rates, are based on inflation expectations. Fed policy controls short-term Fed rates. Long-term rates are controlled by the market's expectation for inflation. So anytime you see negative economic news, you can expect lower interest rates. Anytime you see great positive economic news, you can expect generally higher interest rates. So going forward, as I mentioned, through the rest of the year, I expect a slightly slower market as days on market begin to taper off and increase as they did last year and the year prior and the year prior. And historically, for the last 15 years, you see all these spikes, they all come at the end of the year. Doesn't mean that things don't sell. It just means that they take a little bit longer to sell as the year progresses into the second half. So as a buyer, you have an opportunity to lock in a lower rate right now. However, this is the other edge of the sword that I was mentioning earlier. You probably are going to have a little bit more competition from other buyers who also just locked in a new interest rate, shiny new interest rate. As a seller, this is just good news because lower rates means buyers are willing to pay more for your property. However, as I mentioned, the second half of the year is typically a little bit slower than the first half. Not dead, just a little bit slower. So don't have the same expectations that all your friends told you about when they sold the property in January and February and things were crazy. As a homeowner, I hope this information was helpful to you. I hope it's eye-opening to you. If you ever want to talk about the market or your specific market, like the neighborhood you live in, the city you live in, your type of property, single-family, condo, townhouse, etc., just shoot me a message or feel free to comment or whatever is easiest for you. Let me know and I'd be happy to do this for you. Doesn't cost you anything, no sales pitch or any of that. Just want to be helpful, and I hope this benefits you all. God bless you. If you enjoyed this video, please feel free to do all the fun things that YouTubers and online TikTokers and Instagrammers ask you to do. Take care.